Hard work beats talent when talent doesn't work hard. Wow, what a powerful quote. Hello, this is Huskins, your Forex mentor, and welcome to the daily review of April 23rd and a preview of April 24th, your daily dose of events that shape the Forex markets. Our results for today, we had two we have two more trades. We had one no trade in the morning, so the results haven't changed at all. Let's have a look at the markets. But quick recap from yesterday. I said that the Dow would be up considerably, and I said that the gold would show signs of consolidating, but with a downward drift. So let us see whether I was accurate on those claims. Alright, this is the Dow, and as you can see, I had noted that the markets were consolidating at this particular trend line out here, and I'd expected the market to go up. There's no earth-shattering news today which would have caused this. So in my opinion, it is the technical analysis in play right now that which has caused this particular upward movement, but we were expecting it. Strength or not, we know what the sentiment of the traders are. Then let's look at gold. I'd mentioned that the gold would consolidate, so consolidating it is, and with a downward drift, and downward drift is what we have. Another chart which I'd like to share with you is the US dollar index. Yesterday the US dollar had made multi-year highs but had closed down below. So it had punched through these multi-year highs and had not managed to close above that or even have a buy candle. But today, right now, as we record this, it's flirting with the highs right now, and if we close above this particular line, which is 10,574, that would mean a bullish signal on the US dollar. That means bearish for the Euro USD and bullish for the USD CAD, so on and so forth. But as you can see, it's making multi-year highs right now, right from the time this index has been computed by FxEM from 2011. So now what's going to happen for tomorrow or the foreseeable future? I'd expect this to continue to go up. The idea a lot of people will have is to short the Dow when it reaches 14,878, but do not do that. I'm going to expect the Dow to continue to march even upwards. Like I've always mentioned, it is going on hot air, but sometimes you don't fight hot air. It goes up, it'll go much higher, and then when the smart money gets out, we know from the commitments of traders report, that's when we'll be going short, not right now. And similarly for the gold, I'm expecting another push downwards now. So in a consolidatory sense, but another movement downwards. Though longer term I'm bullish on gold, but as of right now we need to accept what's available on the ground. Gold lately has had as much luster as a rusty tin can. Who said this? This was Time magazine in August 1976. Can you beat that? Within 4 years after that, from 1976 to 1980, gold rose 600%. So whatever the markets or the so-called news media telling you about gold, we know that it's going to hold its value. The point is that as traders we need to know when to get into the market. The time is not right now. Now, China's weak factory data sent Asia Pacific markets sliding. Yesterday. For us, meaning Tuesday for the Asian markets. So basically, that after the data showed that China's manufacturing sector is slowing, China Shanghai Composite gave 2.6%. The Hong Kong Hang Seng fell 1.1%. The Taiwan's index lost 0.4%. Basically, across the board, it was down, apart from Australia. Now, Australia's S&P ASX 200 gained 1%. Why is this important? Because Australia is the markets in Australia are more tied to the markets in America, rather than them being tied to the markets in Asia. So when you look at Australia bucking the trend on a bad China report, one can expect the markets of such as the Dow Jones or the S&P to rise in USA, and that's exactly what we saw today. But these are a few inter-market clues which we need to look at. Another important note I'd like to share with you. Now, a surge in the value of Italians' debt since the 2-year note falling to a record low of 1.208% as traders speculated the re-election of a President Napolitano will take a strong hand in breaking the political standoff that has prevented Italy from forming a government. The yield on the 15-year debt fell to 14.23%. This has been the lowest figure since 2006. What does this actually mean? It means that the markets are calming down right now. Dwindling inventories slows sales of existing homes. Now that's a good sign for the U.S. home market. A tightening supply of existing homes in the U.S. largely was responsible for a 0.6% decline in sales between February and March. Normally, a decline in sales is not good, but now let us see why has there been a decline in sales, and that is very important. More austerity won't solve EU's problems. Now, this is, the 11th and the current president of the European Commission, who's basically a Portugal politician. So, now, why is this very important is the fact that I've been sharing with you news tidbits and the way the markets are now trying to you know look at austerity, and instead of asking people to cut back, we're going to have people which will be more increase in the deficits and increase in spending programs, which are going to drive the markets higher. So all in all, the take home message right now is that the mood and the words of the politicians all around the world are changing from more from austerity, that means cut spending, otherwise you cannot grow, to that you cannot just cut spending out of the way because it has no public support for it to work. Now let's preview for tomorrow. So far we're going to have two more trades for today. We're going to look at both the New Zealand cash rate in about an hour from now, as well as the Australian CPI. Tomorrow we have a wonderful US durable goods sales, and we have actually clarified the trade and the qualifiers for this trade plan. So to our trading success, thank you for listening in and have a wonderful day.